Hi guys, it is November 5th, 2020, and futures are pointing to a much higher open, especially for the Nasdaq, as weekly jobless claims came in pretty much in line. But we are 2 days after the election, and we had a massive rally, as I thought, as I predicted, as many people who stayed on the sidelines actually poured into the market, and there are a lot of money still staying on the sidelines. So I think the rally will continue as we have a Senate which is still staying Republican, and Republicans also gain seats in the House, and still unclear on presidential election, and looks like it's favoring Vice President Biden over President Trump. But at the same time, the Senate, which is staying Republican, means that it's a smaller stimulus package, but at the same time, the taxes and regulations will stay pretty much the same, because Senate will not allow Biden to do too much on that front. So that triggered a huge shift from value stocks, so-called value stocks, to tech stocks. And value stocks, I mean industrials, banks, and utilities, and other things that were very hot pre-election, and growth stocks like tech stocks were sold off. And this Senate being a Republican, and actually the possibility of Biden coming into the White House actually triggered a huge shift from value to growth, because stimulus mostly helps value stocks, and the fact that we won't have the huge tax increases, possibility of that is favoring tech stocks. So and it's still not too late to buy them, and they had a huge run for the past several days, and I think they may still go higher. Okay, so let's jump to SPY, ETF for S&P 500, and SPY to me looks like in a W pattern. Okay, you see this W pretty much. Okay, so I think the SPY is still going higher, and especially Nasdaq QQ still also in the W pattern, and it still also may go higher. So I anticipate a rise, and pretty much a run till the end of the year. Okay, so let's jump to corporate news. Before we do that, if you want to see my trades on pretty much everyday basis, you can check out a Patreon link in the description. Okay, so let's start with W. W is the Wayfair. Wayfair is a consumer products and online retailer of furniture, and they reported earnings that triple consensus estimates of 80 cents, and they reported $2.30 per share. Revenue was also above. Membership numbers grew 50% from a year ago. Okay, so I really like the numbers from Wayfair. And shares came down yesterday because it's kind of considered to be a value stock / growth stock, but I think it's a pretty good buy to me right now. Okay, so I think the shares may go higher than that. So let's jump to Jazz. Jazz Pharmaceuticals. So Jazz reported recently quarterly earnings of $4.31, 27 cents above estimates, and raised full year forecast. And unfortunately, Jazz is the stock that I've been watching for a while, and it's been sitting in the same range, and it's pretty much been dead money for quite some time. I mean, it's been going from $100 to $150 for forever, but now maybe it's ready to break out. So I think it could be interesting to see. I don't know if I would buy it, but I would see if it could break out of the current range. Okay, Tesla. Okay, so Tesla shares are higher pre-market, and it's been reported that it's partnering with Paris-based company Neoen to set up a massive lithium plant in Australia. The plant could be operational by the end of 2021, and also on a separate note, Tesla semi-trucks has been ordered by one of the companies. I think 150 trucks have been ordered And Tesla in general, I mean, I think it should be going higher. I totally should, because Tesla falls in the category of stocks that actually benefit tremendously from the current environment, from lower taxes and Biden possibility of going into the White House, so higher possibility of incentives for companies for the green green based companies, the companies that like solar and alternative energy companies, and I think Tesla may go higher, and I would be buying Tesla here. Okay, Cirrus Logic. So Cirrus Logic is one of the suppliers for Apple, and it beat estimates by 36 cents, better than expected revenue. We'll have a change of CEO by January 1st. Okay, so Cirrus Logic has been in a choppy trading, but I think it could go actually higher, as the ramp up to 5G could benefit Cirrus a lot. CRUS. Okay, Humana. So Humana is the insurance company, health insurer, reported quarterly earnings of $3.08 versus $2.81 consensus estimate. Revenues were well above, and Humana raised its 2020 Medicare Advantage membership growth outlook. But in general, these medical insurance company like Humana, like UNH, okay, so they all jumped yesterday because of the because of the Senate staying Republican, and there is less possibility of a huge of them being irrelevant, pretty much, because people were afraid that if there was a blue wave, these companies would suffer tremendously. But the possibility of the blue wave is actually zero right now, and actually these companies jumped a lot, and actually they may actually go higher after this jump as well. Okay, SWKS. Okay, Skyworks Solutions. Skyworks Solutions are one of my favorite companies, also an Apple supplier. Earned $1.85 versus $1.52 expected. Revenue was well above forecast. Issued an upbeat outlook due to ramp-up demand for 5G platforms. And I don't know why the shares dropped, actually. Probably because in the anticipation or to this report were too high, but I mean, it beats me why the shares dropped, because the report was really good, and the numbers, I really like the numbers and the outlook and the 5G ramp up coming up, and I think SWKS is a strong buy at this area, in this area, like 140 area is a strong buy to me. Okay, Lyft and Uber. These companies are getting a lift pretty much recently, getting a boost after California voters approved proposition which allows companies to classify workers as independent contractors rather than employees. So that's a huge win for Lyft and Uber, huge win. And I think the shares may go actually higher. I mean, Uber sitting in... it's a little bit too high to me, but Lyft is a pretty good pickup to me at this area, in this area. Okay, so also solar companies are getting a lift today. Solar companies are higher, like FSLR for solar, Run, which is Sunrun, SPDR. I'm just going through a list of my favorite solar companies. CSIQ. Okay, all these companies actually going higher pre-market today in anticipation of Biden win, and they've been going higher in anticipation of Biden win pre-election, but closer to the election they started to go down because people thought that maybe there's a possibility that Biden won't win. Okay, so but right now this possibility subsided, and looks like Biden has an advantage at this point, and these companies are being bought, and I actually think it's a pretty good buy in my opinion, and these solar companies may go higher if Biden wins. Okay, because it will be more favorite alternative energy policy to come. Okay, DKNG. DKNG and Penn National. Okay, these and other sports betting stocks are rising after voters in Louisiana, South Dakota, and Maryland approved legalized sports betting. And I think these states approve and other states will follow. So DKNG is a pretty good buy to me, and shares came down significantly after, for example, DKNG issued a second offering at, I believe, at $52 per share, and after that the stock was really struggled. But right now with states approving legalized sports betting, I think shares may go higher. DKNG and Penn National. PENN. Okay, so these both these companies, both these stocks are buy in my opinion. Okay, GM shares are jumping because they reported $2.83 per share, beating $1.38 estimate, held by strong demand for trucks and SUVs. Revenue was essentially in line, but as you know, GM is coming up soon with the Hammer EV car, and people were very excited about that, but then they reported that they still don't have a working version of that Hammer EV truck. Okay, so shares came down a little bit, but right now it's going higher, and I think it's pretty good buy to me. I mean, it's looking pretty good to me. I would not buy it at the open, but would like the shares to come down a little bit, but closer to like around $36. I think it's a compelling buy to me. Okay, Regeneron. Regeneron is a pharmaceutical company, one of my favorite companies. Actually reported a big quarter, beating by top and bottom, boosted by improved sales of drugs like eye treatment Eylea and eczema drug Dupixent. I don't know how to pronounce this. Okay, so Regeneron reminded people that they're not only doing treatment for COVID, they also have other drugs in pipeline that are selling very well. And speaking of treatment of COVID, I think they're about to get an authorization from FDA very soon of their treatment, and it was reported that they did very well, and this is one of the treatments that President Trump took when he got sick with COVID. So I think Regeneron, even like around $600, is still a buy to me. Okay, REGNEN. Okay, Netflix doesn't have any particular news, but I like the charts for Netflix, and I think they can benefit from this environment, and I think the shares may go higher. I also like the shares of Nvidia. And Nvidia shares are rising pre-market on the heels of the reports from Qualcomm. Okay, and Qualcomm reported really good numbers, also higher pre-market. Reported earnings of $1.45, beating $1.17 estimate, gave a beat forecast as Apple and Samsung are ramping up production of 5G phones that could use Qualcomm chips. So what can you say? I mean, Qualcomm's shares are higher. I would like it to come down after the open, but around 140 area, I think it's a compelling buy to me. Okay, but this disappointment for me this earnings season was Zynga. Actually, Zynga reported smaller than expected loss, 11 cents versus 13 cents expected. Revenue was actually well above, and active users numbers rose to record levels. But I mean, I expected better earnings from Zynga, and shares are lower. And it's pretty much, to me, it's pretty much dead money. I mean, I would just, I mean, it's been sitting in $9, $9.50, maybe under $9 forever. Okay, so it's dead money to me right now, and I expected much better numbers from Zynga, to tell the truth. But what I like, the numbers that I like is from Match Group. They reported much better numbers as pandemic helped boost the popularity of its dating services, and shares are trading higher, and I would buy Match. I think it's a good stock to buy. Okay, that's it, guys. Don't forget to subscribe to the channel, click the like button, and I'll see you Monday.